Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. Returning guest on the program today is Frank Holmes. He's the Chief Investment Officer of U.S. Global Funds, which can be found at usfunds.com. Frank, thanks for coming back on the program.
It's great to be with everyone.
Frank, I want to start off with what you're calling a tsunami in the junior resource space. Our listeners are predominantly interested in investing in junior mining equities, and for the last 10 months, things have not been that rosy. There's been a pullback or sideways action, and a lot of talk about this GDXJ rebalancing. Can you talk about the significance of that in the sector?
Well, you think of that they garnered most of the assets away from gold mutual funds, went into the GDXJ in the small cap space, and it just became index buying, no separation of value, who's doing exceptionally well fundamentally, and this reversal, because they're going to own too many companies, more than 20%, so they automatically just say get rid of them all, has created this uncertainty, and it's the sheer size of the number. You're talking about 5 billion went in, and $3 billion is going out of small and mid-cap gold producers, dominating the Canadian scene. And a lot of Australians have done exceptionally well. The volatility has made a lot of people when I was recently at the mining conference in Vancouver, they just weren't aware. I'm going to articulate that don't be afraid of this. Use it as your opportunity, because some of these stocks have been sold down indiscriminately when they're reporting phenomenal fundamentals. And so the retail investor that's out there and the smart institutional investor can pick away on some of these stocks like Klondex with $10 million in free cash flow, record revenue. We like to look at revenue the past quarter, calling over the past 4 quarters. Is there a strong momentum? Wesdome. These are companies that are doing exceptionally well, high grade, not low grade, beautiful growth profiles. And they've been knocked down just because of fund flows.
Right, and Frank, there's another reason they've been knocked down even before the rebalancing started by the GDXJ. You had people that heard about it and anticipated the selling of these companies, which almost further depressed the selling and elongated it. Is that the case?
It has. Everyone was trying to front run, anticipating what was going to take place, and some of these companies were mentioned that they went into the index, and then 2 weeks later, after the end of March, all of a sudden they're getting blown out. So their stocks screamed up, and then it turned around and gets crushed down. I think that some people tried to anticipate it. Others are bewildered over it. But I think as the story gets told, like on your program, is a great dissemination of information to explain that this is a successful ETF like the GDXJ has basically created its own bubble in the space, and now they have to unravel that, and it's disruptive. But that disruption is your listeners' opportunity.
So the depressed prices in some of these companies, Wesdome, Klondex are 2 great companies that you mentioned, is a real opportunity. For people trying to understand this GDXJ rebalancing, where are those funds, that $3 billion US of funds that they've pulled out, where is that now being reallocated to?
It's going to the big names, the Barricks, the Newmonts, the Goldcorps of the world. And to some of the other global gold producers in Australia that are over $3 billion in market cap. But the big torque in this whole game in a rising gold scenario has always been the Schmids, because the small caps get taken out by the mid caps and the mid caps get taken out by the big caps, or the mid caps merger and they Pac-Man each other. So that's where the real opportunities for growth are.
Final question on the rebalancing. When do you expect all of this movement in money to end and for the depressed prices, the selling to subside and things to go back to normal?
Well, it's expected to end June the 16th is the last drop date for names that'll be sold. Some people are trying to figure it out and sort of gun it, but I think that we have to wait until that date. And between June the 16th and the end of the month will be just a great buying opportunity. And rather than just buying like an index, you just want to be selective and look for those stocks that have higher profit margins, higher returns on invested capital, and to growth in revenue. And a really important, Colin, is in our analysis in the past 4 years, the GDXJ companies have destroyed, a lot of them have destroyed shareholder value by increasing shares at a very rapid rate. In fact, the compounded growth rate in shares issued has been 25% a year. It's only a small handful that protected the shareholders' wealth, and so you can see that they're the better performing stocks. And I think that just buying the GDXJ has been flawed this way because money flowing into it covered up a lot of companies that destroyed shareholder value. But the ones we focus on have not.
Frank, over the past couple years, you've been a major proponent of royalty and streaming companies, and to your credit, those companies have excelled in the bear market. They've far outperformed the Barricks and Newmonts of the world during bad times, and of course, during good times, the cash flow persists, and they seem to be a never-ending growth engine for investors. Can you talk to us a little bit about why you like the gold royalty and streaming companies?
A great question. It's always amazing to me that you can have the revenue, what they call the efficiency ratio of a company, is you look at the revenue. And when you look at a Newmont, the revenue is, say, $250,000 a year. Franco-Nevada has royalties on Newmont's assets, and they have $25 million of revenue per employee. I mean, that's just a mammoth difference. So the ranges of gold, when you look at Royal Gold, Silver Wheaton, who has the highest, and Franco-Nevada, have the highest revenue per employee in New Silver Wheaton, in fact, is in the world. You have a small group of people, less than 25 people, high profit margins like a tech company. It's just a very nice, clean business. And the other part that's really important for investors is that they have rising price to book. And if you looked at Amazon, a lot of people can't believe it's multiple. How can it ever trade like this besides being a Pac-Man of a disruptor in every industry? If you look at Amazon, the majority of the time it's revenue for the 4 quarters. It continues with its program of being disrupted, but is growing its revenue. The cash flow is volatile because it's always spending for that growth, but its price to book is rising, just like the revenue line. And anytime that happens, you see that money piles into as a sustainable growth stock. Well, guess what? The royalty companies like Franco-Nevada, same thing. Every time they do a financing, like last year, Franco-Nevada bought Goldcorps assets. Franco-Nevada could do a quick financing of $1 billion in 24 hours, and it was accretive on a price to book. It lifted the price to book, whereas Goldcorps was going to be massively dilutive. It would take them much longer than a day to raise the money, and they would have had a hit on their price to book. So the quant world that now looks at a lot of these stocks, they like to look at price to book, not NAV, because all the different valuations for net asset value for these mining companies is subject to the discount rate. So one brokerage firm has a 5% discount rate, another one has a 10%, another one has a 7%. This is all forgotten when you just look at price to book value, and this is a key factor.
Frank, here at Palisade Research, we recently did some research, some charting that probably wouldn't surprise you, showing that in times when royalty and streaming deals excel, when there's billions of dollars, more of those going on per year, it usually indicates very, very bad market conditions for the miners. And then when equity becomes the predominant way for companies to finance and streaming deals drop off, you start to enter into a bull market period. And it looks like we're starting to do that, meaning these royalty and streaming companies will benefit from all of these deals that they've done the last few years, but there's not too many big deals left at this time in the market to do. Does that concern you at all?
No, I think that they know how to wait and time themselves. There'll always be, air balls thrown up and mistakes, which is their benefit. So I think that I've been through these cycles before with Franco-Nevada. If you take a look, when it first went public, it was a $2 million financing in '82, and it went to a $3 billion market cap from $2 million. All during where gold fell from 850 all the way down to 265, and then rallied up to a little over 500, then fell down during a whole bear cycle in gold. Franco-Nevada continued to tear through up and down these cycles. Then they go 2008. $1 billion being bought back out of Newmont, and it's now $17 billion market cap. No, I think that they know how to ebb and flow within the capital markets, and I would bet on this small group of intellectual brain power.
Yeah, Frank, I couldn't agree with you more. Absolutely great section of the market to look at for gold investors. Frank, thanks again for coming on the program. Just for our listeners to know, if you go to usfunds.com, you can subscribe to what's called Frank Talk, which is a free blog service that Frank puts out and sends out information to his full list of contacts, and it's a great resource to have access to. Frank, thanks for coming back on the program.
Well, Colin, it's always great to be on your program, and I think you do a fabulous job helping educate investors to understand the volatility behind these capital markets and how you can use volatility as an opportunity, not be afraid of it.
Thank you, Frank.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?